Our market's calmer today after Europe was relatively calmer as well. So is this a pattern we're stuck with, and what does it mean for where you should put your money right now? Nicholas Collis is Chief Market Strategist with Convergex Group. Jack Caffrey is Equity Strategist with JP Morgan Private Bank. And CNBC contributor Ron Insana joins us for the hour. Ron, welcome. Good to have you with us.
Thank you very much.
I'm going to start with you and ask you two questions.
Sure.
One, are the U.S. markets prisoner now to what goes on in Europe and to the European markets? And react to that matter that Guy just talked about, the short selling ban, and whether that has arrested the fall in banking shares there.
As Groucho Marx used to say, I'll answer the second question first.
All right.
No, the short selling bans are ridiculous, and they don't do anything that to slow. There's so many ways the halt of or slow the slide in a stock. There's so many ways for professional traders to work around that it really does nothing. And as we found out here in 2008 and in 2009, it did very little to help the banks stop going down. With respect to us being hostage to Europe, and Tyler, I think the answer has to be yes. I mean, as long as we are worried about a funding crisis in European banks, as long as there is no comprehensive plan put forward to deal with not only the banking crisis that may be going on in Europe, a Lehman-like moment, and no plan to deal with the indebtedness of the continent, I think we're, for the moment, hostage to them.
Nick, are we prisoners to Europe, and what does that mean? Because that's a problem that's not going to be solved anytime soon. How do you deal with that?
Yeah, it's a very tough situation. I think we certainly are hostage to that problem, and that problem is not going to get resolved in the coming week or two or three. I think the best case you can argue for is some more adults coming into the room in that situation and beginning to resolve some of the longer-term issues. But again, it's really not a 1 or 2 or 3 day fix. It's a 1 or 2 or 3 week negotiation and process.
Jack, your reaction here. I've heard some people saying that it looks like John Bollinger yesterday talking about technical indicators that perhaps the market may be getting ready to put in a bottom. Yeah. Others saying that maybe we're seeing yields at the lowest we're going to see them and stock prices at the lowest we're going to see them for some time. What's your view on that? And if you buy that, what should I be doing?
Well, I've been doing this for more than 20 years, and I've yet to hear a little bell go off in my ear to tell me that we've actually made our bottom. That said, when you see markets go up down 6%, up 4.5%, down 4.5%, up 4.5%, I do think people are trying to find that bottom. I think people are looking at rates. They're looking at multiples. They're looking at the news flow. And what we've had to live through, in addition to the European headlines, has been a massive rebasing of expectations for second half growth. And I think ultimately what it comes down to in investing is understanding those expectations, trying to get them low enough that you actually can start exceeding them.
Yeah, Nick, you say that a huge spike in gold signals a bottom in equities. Haven't we seen that over and over again? I mean, how would we take a cue from that? Gold sort of continues to spike.
Yeah, we did a study that we published this morning that showed the correlation of the VIX, which is the traditional fear indicator on the street, with gold. And typically speaking, over the last 22 years, gold and the VIX have not been very well correlated, except during times of exceptional stress in the system like we're seeing now. It signaled very accurately the bottom in 2002 with a very strong signal and a very high correlation. We're seeing numbers that are getting close to those levels, 45 or 50% correlation. We do, I think, need one more blow-off, which perhaps could come next week, where gold spikes $50 or $75 and the VIX goes closer to 60 or 80. And then I think you clearly have a buy signal, even though it's going to be very stressful to execute on.
Jack, I think you answered the first half of my question, which was that no bell goes off to tell you when the bottom has been hit. But the second half of my question I'd like to spend a little more time on, and that is, so what do I do? Bell or no bell? Right. What do I do with my money here with prices where they are?
Well, I think part of it is try to think about what your expectations are, A. B, what's your time and how much of a commitment can you make? Because ultimately, this is going to be a messy next couple of days, next couple of weeks. But if you can look out 3 months, 6 months, 12 months, I think you're looking at valuations in equities that are reasonably certainly very compelling if analysts are right. And even if they're not right, and we are actually seeing earnings roll over, it looks as though markets have managed to discount a fairly dramatic decline in earnings. And even on that basis, stocks look very reasonably valued in that regard. So I think investors should be looking at equities.
I think I will go for the Nobel Prize here, which is that
Larry Kudlow's not here. Yeah. I don't think there's no one to award it.
Exactly. No, I actually think quite the contrary, that if Fed Chairman Ben Bernanke comes out and mentions additional unconventional monetary policy tools next week at the Jackson Hole Symposium, just like last August when he ushered in QE2, and I'm not saying there's a QE3, I'm saying we're going to get a different set of policies this time around if the Fed acts further, that might might help put a bottom in place after all this volatility. Again, we still have Europe to contend with, but as Jack had said, as we're looking for adults in the room, Ben Bernanke is the only one there. I think most people in the back of their minds are thinking right now, and you hear this refrain over and over again, give me Bill Clinton, Jim Baker, give me Jack Welch and Dick Grasso, give me guys who can walk into the White House and say, all right, we're going to put together a plan, nail this thing, hammer it out, rather than sit around and wait for a solution to come to us. And I think that's been notably absent both here and abroad, and you can hear people just screaming for it, the market's screaming for it.
Political leadership.
Yes.
Political leadership. Yeah. Plain and simple. Nick Colas, final question to you. What should I be doing with my money right now?
Well, I think for right now, the most important thing is try to control that sense of panic that I think has overwhelmed a lot of investors this week, and think about where you want to be over the medium and long term, because the near term is very rocky, very shaky, and the bottom line is it's going to be painful, but you have to buy when there's blood in the streets. The old cliche is absolutely true, as hard as it is to do.
Folks, thank you very much. We appreciate it. Maybe we brought a little clarity to the situation there. Thanks again.